declared BRICS dead. And this comes just months after repeatedly threatening 100% tariffs on its members over de-dollarization efforts. But why is Trump so concerned about BRICS? Why does the US see any move away from the dollar as a direct threat? And where does India stand in this evolving economic battle? Our next report getting you the answers.
US President Donald Trump has declared BRICS dead, citing concerns over de-dollarization. For months, Trump has warned BRICS members of 100% tariffs, accusing them of attempting to reduce reliance on the US dollar. BRICS, originally formed by Brazil, Russia, India, China and South Africa, has expanded to include Egypt, Iran, the UAE and Ethiopia, with Saudi Arabia considering joining. The group now represents over 31.5% of global GDP, surpassing the G7's share at 30%. Despite Western concerns, BRICS is not an anti-Western alliance, as key members including India, Egypt and UAE maintain strong ties with the US and its allies. India views BRICS as a crucial multilateral platform to reform the global financial system, historically dominated by Western institutions. It also serves as an economic gateway, enhancing India's trade access to Central Asia through Iran, North Africa via Egypt and Eastern Africa via Ethiopia. The core issue behind Trump's reaction is de-dollarization, the effort to reduce dependency on the US dollar for international trade and reserves.
Over the past few decades, the US dollar has reigned supreme as the world's dominant currency. However, this global throne is now under fire. BRICS nations are challenging the status quo, aiming to reduce their dependence on the dollar. This movement, known as de-dollarization, is gaining momentum. Over 600 tons of gold have been quietly hoarded by BRICS nations. In response, Donald Trump declared a 100% punitive tariff, stating, "We will place at least a 100% tariff on any BRICS country doing business with the US." At the same time, BRICS is building a decentralized blockchain payment system meant to bypass and ultimately replace the US dollar in global trade. Is the dollar's dominance finally being challenged? Midway through his presidency, Trump issued a stern economic warning. Any BRICS nation that creates or backs a rival currency to the US dollar would face a 100% tariff and a permanent ban from American markets. Trump called it an economic red line that no country would be allowed to cross. For him, the dollar is more than just money. It's a symbol of US global power, decades in the making. He reiterated this stance on social media multiple times, signaling his commitment to preserving the dollar's supremacy. BRICS was quick to respond. Brazil, as BRICS chair, became the first to push back. Ignoring Trump's threats, Brazil expanded Pix, its digital payment platform with over 150 million users, to enable international transactions. Simultaneously, it introduced SML, a cross-border payment system using the Brazilian real, completely bypassing the dollar. Although transaction speeds are currently moderate, Brazil is aggressively developing real-time payment capabilities to build an efficient, independent system, marking the first strategic financial hit against the dollar's global role. And Brazil isn't alone. BRICS is aligning its members around a shared goal: de-dollarization. One major initiative is BRICS Pay, a blockchain-powered, decentralized global payment system designed to cut out SWIFT, the core infrastructure behind the dollar's dominance. Alongside this, BRICS is crafting a new reserve currency to use in cross-border settlements. The most daring move of all? Gold. In just 2 years, BRICS countries have stockpiled over 600 tons of gold, not as a symbol of wealth, but as a protective financial buffer. In a post-dollar world, this gold acts as insurance against external monetary manipulation. Step by step, BRICS members are reducing their reliance on the US dollar. China and Brazil are now conducting trade in yuan, and real Russia and Iran have integrated their domestic banking systems to conduct bilateral trade. Without SWIFT, India and Russia are trading oil using rupees and rubies. South Africa is increasing its trade in Chinese yuan.
They took a decisive step by inviting 6 new members to join their ranks. 5 of those invitations have now been officially accepted. Egypt, Ethiopia, Iran, Saudi Arabia, and the United Arab Emirates have confirmed their intention to become full members of the BRICS. This expansion will significantly increase the bloc's collective economic and political clout. These 5 nations represent diverse regions and industries, from oil-rich Gulf countries and states to populous African economies. The expanded BRICS presents both opportunities and challenges. This enhanced economic and political weight could reshape international trade, financial systems, and global governance. The alliance now includes nations from Africa, West Asia, and beyond, underlying its commitment to fostering a new world order. Meanwhile, Argentina has declined the invitation. Still, with the latest inclusion, the focus shifts to the potential collaborations, economic partnerships, and geopolitical shifts that will emerge from this expanded alliance.
The most powerful signal came when BRICS expanded its membership, welcoming Saudi Arabia, UAE, Iran, Egypt, and Indonesia. This expansion wasn't random. It reflected a global desire to break free from a US-controlled financial system and move toward a more balanced, multipolar order. But America's own actions may be accelerating the shift. After Trump's 100% tariff declaration, the US market trembled. Within 24 hours, the Nasdaq fell by 2%, the S&P 500 dropped over 1%, and the Atlanta Fed's GDP model forecasted a negative 1.8% growth rate for the first quarter of 2025. Investors began to question whether the dollar had become more of a political weapon than a global standard, and if so, who really stands to lose? In the last quarter of 2024 alone, a withdrawal wave hit U.S. bonds. Over $390 billion was pulled by international investors. Brazil withdrew $55.9 billion. Ireland reduced holdings by $42 billion. The Cayman Islands and Canada sold off $41.2 billion and $37 billion respectively. India and Norway cut $35 billion each, and even longtime holders like Japan and China pulled out $7.8 billion. This wasn't a protest. It was a preparation for economic turbulence. Many believe Trump's return has reignited concerns over the America First doctrine, marked by tariffs and unpredictable sanctions. With higher U.S. interest rates failing to offset these geopolitical risks, countries are now favoring assets like gold, the euro, or digital currencies. And now, the trade retaliation begins. Starting April 2, 2025, Trump's new tariff plan takes effect, a reciprocal tariff strategy that will punish countries with high duties on U.S. goods. In response, the EU is targeting American staples like jeans, whiskey, and motorcycles. China increased tariffs on U.S. agricultural exports like pork and soybeans, and Canada began consultations to review $125 billion worth of U.S. imports. These moves echo the 2018 trade war, but now the stakes are even higher. The repercussions are already visible. American farmers and manufacturers face the risk of losing key markets. Automakers warn that car prices could rise by $1,000 to $3,000 due to higher part costs, hurting demand and jobs in states like Michigan and Ohio. What began as a shield for U.S. interests has turned into a financial earthquake. In just one trading day, $4 trillion vanished from the U.S. stock market. The sell-off started in tech. Apple dropped 6.3%, erasing $160 billion in value. Nvidia fell 7.8%. Losing $180 billion. Tesla plunged 9.2%, slashing $125 billion. Big names like Microsoft, Meta, and Google also lost a combined $350 billion. The ripple effects didn't stop at tech. Delta Airlines cut its profit forecast by 50% due to rising fuel costs. Its stock dropped 14%, while American and United Airlines plunged 11.2% and 9.8% respectively. Major hedge funds like BlackRock, Vanguard, and Citadel triggered the largest stock liquidation in 2 years, selling off $240 billion in one day. Financial institutions weren't spared either. JP Morgan, Goldman Sachs, and Bank of America each fell over 5%. The S&P 500 dropped 5.7%, its worst single-day loss since 2020. Even Walmart and Amazon suffered, losing $56 billion and $90 billion, respectively. Bitcoin fell to 42,000, with $200 billion wiped out from crypto markets. The 10-year Treasury yield dipped to 4.22%, signaling an investor flight to safety. a classic precursor to recession. All of this begs the question, is the US dollar still the world's safe haven? A single policy decision triggered a global economic backlash and market meltdown. The world is rapidly adapting to a financial order where the dollar is no longer the default. What comes next may reshape everything. This isn't just economic news, it's a seismic shift, and it's only just begun. But before we dive into the next phase of the video, share your thoughts on President Trump and the tariffs and how you think BRICS and Japan should retaliate. And don't forget to like, subscribe, and comment to our channel for daily updates. Japan's financial retaliation, a tectonic shift in the global economy? $4 trillion evaporated from the US stock market in just one day. And the question lingers, what happens next? Yesterday, President Trump addressed last week's shocking market plunge, which many attribute to confusion surrounding his aggressive tariff policies.
The latest nation to feel the heat is Japan.
Every single day, more than $1 trillion worth of yen exchanges hands.
I feel like the Bank of Japan is more in charge of the direction now.
This as President Trump keeps on talking about tariffs being imposed on April 2nd.
If things go incredibly wrong, you'll lose money both on the stock side.
I hate to predict things like that. There is a period of transition because what we're doing is very big.
But now, all eyes are on Japan. In a move that could shake the very core of US financial stability, Japan has begun selling off vast amounts of US Treasury bonds, a silent yet significant form of economic retaliation. For decades, Japan has been a major lender to the United States, holding hundreds of billions in US debt and playing a key role in keeping the dollar strong. But according to newly released data, Tokyo has offloaded tens of billions of dollars in US treasuries in recent months. The reason? Escalating tensions over US tariffs on Japanese electric vehicles.
Yes, President Donald Trump announced his plans for his long-promised tariffs on automotive imports. Japan warning of a significant impact on global trade, calling the move extremely regrettable. Prime Minister Shigeru Ishiba says his country is putting all options on the table and reviewing an appropriate response.
アメリカに対する投資も屈指のというか1位の投資をしておると。そうだとすれば本当に全部の国同じでいいのかということはきちんと申し上げておかねばなりませんし、今までも申し上げてきたところでございます。
The Biden-Trump administration's protectionist trade stance has targeted foreign EVs, including those from Japan's automotive giants, Toyota, Honda, and Nissan. The backlash from Tokyo has been subtle but strategic, hit Washington where it hurts most, its debt financing. To understand Japan's reaction, we must look at the broader United States strategy. America is determined to grow its domestic electric vehicle industry, bolstering companies like Tesla, General Motors, and Ford with government incentives, while slapping high tariffs on foreign competitors. Unfortunately for Japan, a global leader in hybrid and electric vehicle technology, this move hits especially hard. Toyota pioneered hybrid vehicles with the Prius. Nissan's Leaf was among the first mass-market electric vehicles. Honda's electric vehicle offerings are expanding rapidly, yet United States tariffs are locking them out. By reducing its U.S. bond holdings, Japan sends a powerful message. If Washington continues this protectionist approach, Tokyo will no longer help prop up the American economy by buying its debt. This financial maneuver isn't just retaliation. It may also be part of a larger pivot. Countries like China and Russia are already trimming their dollar reserves. South Korea and India are diversifying their holdings. Now Japan appears to be doing the same, redirecting capital into Asia and strengthening regional financial ties. This marks a significant step toward a multipolar financial world, where the US dollar is no longer the undisputed king of global trade. If Japan continues this trend, the implications are vast. A drop in dollar value, leading to costlier imports and rising inflation. Increased US borrowing costs, as interest rates on bonds surge, and global instability, as other nations follow Japan's lead. Now the US faces a dilemma. Will it ease tariffs and stabilize its economic alliances, or stay the course and risk deeper financial strain? The last 6 months have seen the US stock market tumble nearly 10%. Many are now referring to this downturn as the Trump slump, a crisis spurred by chaotic tariff policies and aggressive trade wars with longtime allies. Major business leaders, including executives from Ford, GM, and Whirlpool, have expressed deep concern. Rising tariffs on imports such as beef, bourbon, and essential goods have driven up prices for both companies and consumers. Manufacturing, agriculture, and retail industries are all seeing job losses. While unemployment remains low in general, cracks are forming, especially in blue-collar sectors heavily reliant on trade. Wall Street and global banks sound the alarm. Financial institutions are losing patience. The instability triggered by these unpredictable trade measures has resulted in billions in losses. In a recent Bloomberg poll, over 75% of CEOs identified Trump's tariffs as a key disruptor of global supply chains. The Wall Street Journal went even further, calling the policy one of the gravest economic missteps in modern U.S. history, damaging trust not only within the country, but also with its closest allies. America's friends are retaliating.
Nothing is off the table to defend our workers and our country.
Some U.S. trade partners say they plan to retaliate if President Donald Trump follows through with new auto tariffs. 25% duties on vehicles assembled outside the U.S. are set to start April 3rd. Tariffs on imported parts are scheduled to begin by May 3rd. Right now, the North American auto industry is effectively a collaboration between the U.S., Canada, and Mexico. If that changes, Canada's Prime Minister says his country will respond forcefully.
We will fight the U.S. tariffs with retaliatory trade actions of our own that will have maximum impact in the United States and minimum impacts here in Canada.
He also says Canada is looking for new trade partners.
It's going to disadvantage our car industry, and it could eventually cause even more pain in terms of job loss in the long run.
The Mexican president says she'll wait until next week to respond. Germany's economy minister says, quote, "We will not back down." And Japan's prime minister says all options are on the table regarding the tariffs.
It's a lose-lose, and that's also frustrating.
Most economists say Trump's tariffs themselves will raise U.S. car prices. His administration downplays that.
The 25% tariff is going to be absorbed in a lot of different ways, and we're going to race to get more production here. And on net, consumers are going to be better off.
Allies like Canada and the EU aren't sitting idle. Canada, historically one of America's closest partners, responded by imposing tariffs on core U.S. exports. The European Union issued a stern statement warning that it will match any new U.S. trade penalties with its own. For the first time in modern history, key allies are engaging in public and deliberate trade retaliation, signaling that America's go-it-alone strategy has consequences.
A network of alliances that has kept the United States safe after World War II is today, right now, shakier than at any other point, all because of the Trump administration. News breaking today of extraordinary discussions that weeks or months ago would have been unthinkable. NBC News has exclusive reporting that some of the United States' closest allies are talking about scaling back their intelligence sharing relationship with the United States. That includes the UK, Australia, Canada, New Zealand. It's also known as the Five Eyes Alliance. But it also includes Israel and Saudi Arabia, who are having these conversations. And it's because, quote, concerns about safeguarding foreign assets whose identities could inadvertently be revealed. One Western government official tells NBC News this, quote, there are serious discussions going on about what information can be shared with the U.S. The Five Eyes have always worked on the premise that we don't spy on each other. I don't think that's reliable anymore. Tulsi Gabbard and these other characters, I don't think we can have any degree of normalcy in the relationship. That's right now where we are, and I don't see any way that changes. So that's what's happening behind the scenes. Out in the open today, our European allies held another emergency meeting to try to figure out how to prepare for a future without the United States as a reliable ally.
Short-term GDP figures may not immediately collapse, but long-term risks are growing. Higher tariffs make U.S. products less competitive globally. Domestically, inflation continues to rise. As costs climb and global uncertainty grows, consumers are pulling back and businesses are hesitant to invest. The real concern? A drawn-out trade war could lead the U.S. into recession territory. Whether this storm strengthens or passes will depend on Washington's next move. Will leaders double down on aggressive protectionism or seek new compromise to restore confidence? Stay tuned, because the next chapter in this economic showdown is only beginning.
For more information and for more news on the happenings in the political sector and the world globally, don't forget to like and subscribe to our channel for more updates.